Hello and welcome to today's FTSE and DAX analysis. I wanted to quickly go over a couple of things quite early in the day so that any of you that are looking to actually make use of this analysis can write things down, make your own plan, and go and look at some of the concepts that you're already learning from perhaps some other traders and that kind of thing. So I'm getting it done early so that you can go and actually make use of it a little bit better. So starting with the UK100, it is the 8th of January 2024 today. And what I'm looking at here is basically a couple of triple bands either side. Right now, although we are quite early, we're kind of close to the close gap. So that means the market is somewhat efficient and there may not be too much potential trading setups to come. What I may suggest is if we come down to these levels, obviously we would want to look for a long position off this confluence so that the bands are quite close together, and then hopefully we would actually spike outside of these Bollinger Bands as well at the open. So we're looking for the market open volatility to take us into a trade and perhaps get a rejection off one of these levels or target the gap. This all depends, of course, on where we actually open. So at the moment, the market will move around in pre-market phase, and that does determine what kind of trade setups we're going to have. So that's why I like to normally do them a bit closer to the market. But I'll give you a bit of a rundown of what I would expect from each scenario. So let's say the market opens where it is now. We'd have to wait for the open to actually occur and then see what happens. So do we push up really high? I'd be concerned about getting long simply because we are very high in the market overall on the longer term scale of things. If we started dropping, I'd really probably prefer to get long off these levels down here rather than get long just at any point above where we are now. So ideal situation would be perhaps a drop down into these levels and then buy it to target perhaps the close gap. If we were to open somewhere around this area down here and we started seeing bullish momentum, it could mean that we're going to go for the close gap, which would be really ideal. So we have a bit of support down here so that we can perhaps put our stops just below that, and we're really targeting that close gap as a target, or perhaps the pivot if we do start to see it turn around because it is below. So both options, if we're trading or we're opening below this pivot, is we're looking for a buy, and depending on its positioning, this is where you've got to get the experience and see and get a feel for the market for yourself. But I'd be looking for either a pullback right down to this confluence, buy it, or if I'm seeing quite a bit of support and it's being held up and it's not going down, it's actually going up quite strongly, I'd be looking to target the gap just off a buy without hitting these levels first, potentially. So it just depends on what happens at the open. You've got to be very vigilant at that time. So that's when the London market opens. Now, if we did open up above the close gap, I'd be hoping for perhaps a push up into perhaps the breakout long, and then looking for a rejection off that to get us back down to the close gap. Being wary with index markets, sometimes they can inexplicably continue upwards because there's simply a lot of buying and no sellers. As opposed to the foreign currencies, the index markets are designed to really go one way, while the forex markets, it's one against the other, so they're always battling it out, and that's why the pricing stays within reason in terms of its pricing point. It's a very different market if you're used to the forex markets. So just something to be aware of. It can just power up for no particular reason. Over to the DAX, I'm not really seeing anything too extravagant over here on the DAX. We're right on the close gap at this level here, and obviously if we don't really change throughout the pre-market period, I'm not too sure what I would be looking for. Perhaps just on a normal day, I might be looking for perhaps a push down to the pivot and then buy off that. However, The markets, I'll show you the long-term view shortly, which is why I wouldn't do that. It could work, but there's always this concern right now in particular, which I'm going to talk about shortly. What I do see is quite a bit of price activity down at this level here. So down at the 16,474, which is about where the breakout short and the S1, and then down further is the low. I would be tempted to take a long position if we did get a spike down below or very close to these levels, particularly if it was outside of the Bollinger Band. We get a sharp movement at that open, let the volatility take us in and do the work, and then get long. I'm a bit concerned about getting long on the DAX, and I'm just going to quickly show you why. So up here, we're very close to the upper Bollinger Band. Now, see what happens when we get up close. The market really does start to fall. Now, I feel like we're kind of building some selling positions. The market doesn't want to get spooked right now. So whoever the big players are, they perhaps want to just soak up whatever orders they can, sell back into the market for what it has. And last week they perhaps sort of took it a little bit further, but it seems like they're really trying to keep it up at this high level for the moment. So what I'm concerned about is that the market may eventually just push right down and have a really bearish period for, say, 3 months. If you've watched my global overview, it might make a bit more sense as to what I'm kind of talking about and referring to. There was a video that I made last week if you want to go check that out. But I just want to find an example. So here we got kind of close to the Bollinger Bands and it kind of turned down, but it was a bit quicker. We've got this consolidating pricing up here, and I am just concerned that the market may just power down. Just trying to find some other examples. Basically, when the market gets really high, up close to these top Bollinger Bands, I generally expect the market, this is on a weekly chart, so 1 week is one candle. I often expect the market to actually start to fall quite strongly. I do have a couple of positions on the Oz 200, which I've already entered, so it may be a bit too late to get into those, for example, but just taking the market short when it touches that upper Bollinger Band. Obviously, you can take some heat because it's a longer term trade, but that's my concern for the moment, is that the market is very strong and we may be looking to see a bit of a downturn at some point. I'm just wary that it can kind of come out of the blue, it can be really sharp and really fast, and that's when you start having these 300 point down days on the DAX, for example, and perhaps 150 points to 200 points on the FTSE, which is massive on the FTSE. So these really sharp drops, and I'm just being wary that this is the kind of layout on the weekly chart that is really positive for that kind of a setup. The other thing that could be beneficial for a long position though is we've actually gone outside the Bollinger Band on a daily chart for that green candle here over the last couple of days. So that could be a positive notion for the DAX, that we may sort of come up first, perhaps get a triple top up in these levels and then crash, but it can happen really, really quickly. So it's just my concern just at the moment for going long on the indices. And we'll have a quick look at the UK100 as well. So it's kind of been up around the highs, and then as you can see previously around this price point, not so much the Bollinger Band but the pricing, the market does fall back down to kind of this lower channel that we've seen for the past couple of years or thereabouts. We've got that moving average that's kind of tracking up and really getting respected. So the FTSE, or the UK100, is a very good market that follows rules to some degree. It's quite respective of indicators and that kind of thing to some degree, whereas, for example, the DAX, it can be a lot more volatile and a bit less reactive. And because you're dealing with bigger numbers, so it's 16,702 versus 7,675. So it's about a little over double on the DAX. So to get a trade that's around, say, 40 point stop, that's a really good outcome if you obviously get into profit. Whereas on the FTSE, if you're trading 30 points, you've kind of got a lot less chance of your stops getting hit, but then your targets are generally quite a bit smaller. So the DAX, if it does respect a level reasonably closely within that 20 to 30 point mark, you're really laughing if it does get going and sort of gets up to that 80, 100, 150 point mark. So there's a bit more risk reward in that sense if you've got these levels and you're really confident about them. But in terms of layout that I'm looking for, the DAX is a tricky one because of that long-term sort of positioning, and same with the FTSE, but it's likely to potentially respect these levels unless we see all the markets are really crashing. We may be able to get a bit of a turnaround point off these levels, or a really strong push up into that close gap if we kind of in the pre-market get down a little bit further so it's more worthwhile. For example, right here we're way too close to that close gap to really make it worthwhile if our stops were to be down here. And then if that did fail this level, you'd be in a bit of strife for the sake of 15 points potential profit. So you'd really want it to be down around these levels, perhaps looking to bounce off the top of these candles here, for example, and you want to see that positive momentum. Then you might get around, say, 26 points, 25 points, and you could have a 30-point stop pretty safely. And it might be a bit more worthwhile. Obviously, ideal situation is we do get right to these levels and then to be able to take it long. A nice sharp spike down outside of the Bollinger Band as well at the open within the first sort of 2 to 3 minutes. It's really the ideal situation, but the market doesn't always give us that, so we do have to work with what we're given. Stay humble, traders. Thanks for following me. Please do comment if you do want these levels provided to you in some sort of a form, maybe a script or something like that. Just comment in the section below, just saying yes please, and I will perhaps make a video and a web page so that you can go and get the levels each day. That's it from me, traders. Best of luck with your trading, and we'll talk to you later.